government is now actually collecting some profits from those TARP loans, aka the bank bailouts. Meanwhile, the stock market's 6-month joyride has come to an abrupt end this week. Here to break down the ups and downs is the watchdog on Wall Street, Chris Markowski. Good morning, Chris.
Good morning.
All right, so I feel like this is a nice moment for you, because you sat on this couch a year ago when we started into this whole TARP funds and said this is different than what we're talking about bailing out Ford and Chrysler. This is to get liquidity, and we could actually make money off of this, and now it's come to fruition.
All the money we gave to the automakers last fall, well, that's gone. We're not going to see that. They called it a bailout when technically what we were doing was we were giving these banks loans and we were collecting interest. Now many of these banks want out from underneath the government auspices, and they're giving the money back.
Plus interest.
Plus interest.
Profiting for the U.S. government.
Yes, but here's the problem. My biggest concern with this whole TARP thing last year, or one of my biggest concerns, was the fact is, what happens when this money comes back? Are we, the taxpayer, going to get a dividend check? Or is Barney Frank going to take it and spend it on something that he wants to do? And that's what's happening right now. We don't know where this money's going. We don't know how they're going to go about spending it. And quite honestly, it's our money.
Yeah, and what about debt reduction and these kind of things? We leveraged our children's...
debt reduction.
Right.
That's
we
funny.
leveraged our children's future with this gamble by putting tax money out there, but then when it comes back and the profit comes back, we don't give it back to the people whose risk was put out.
Nope. Debt reduction's almost, it's a joke right now. I mean, seriously, you take a look at the deficits that we have going forward. To even think that we're going to even get near any type of deficit reduction. This next week we got the whole healthcare debacle going forward, so I don't see much of that changing.
Now, the stock market had been, as I said, on a 6-month uptick, quite an impressive one, but some people are saying maybe it was too much too fast. Are we seeing evidence of that this week?
Well, no, I just think that the market is probably coming up to where it's fairly valued. I mean, we saw levels last February and March down around 6,500. It needed to come back up. Inventories needed to be replaced. Natural cycle. But the reality is, we got an unemployment rate that continues to rise, and the big numbers are coming out tomorrow on Friday. How are you going to see any real economic growth unless people have jobs?
Right.
And until that changes, until businesses start hiring and start expanding again, you're not going to see any type of real strong V recovery. The type of downturn that we had, we should be seeing 7–8% type of growth. We're going to be lucky to see maybe 3 to 4%, and that's not a real recovery.
Okay, but as far as people's 401ks, some of the people stuck it out. They saw it go back up. Should they freak out again now, or just stay the course?
Well, you've been listening to the Daily Buzz and what we've been teaching you here. If you were compounding your yields and basically using that whole compounding calculator, positive cash flow in your accounts should be higher now than it was back when the markets were at 14,000.
Okay.
Thanks, Kia.
Thank you so much.
The U.S. lost fewer private sector jobs in August than in July, which signals some stabilization in the labor sector. Tentative signs of recovery were also seen in data showing U.S. factories saw an increase in new orders in July for the 4th straight month. Here today to weigh in is the watchdog on Wall Street, Chris Markowski.
Notice I didn't bring my party hat noisemaker to discuss these jobs numbers. Lost fewer. It's kind of like a double negative.
So I'm assuming that you don't think that it's necessarily a good thing, even though some people are saying it is.
Well, it means we're losing less than we did before, but we're still losing. There's still a downward slope. Okay, so before we were on a double diamond trail, now we're on more of a blue square to the downside.
But at least, even though job numbers are still down, it's always nice when you say, okay, there weren't as many lost as were projected to lose.
Yes, but until we start seeing, and it's the key, it really is the key to everything, until we start seeing employers start to hire once again, the employment numbers start to kick up, we're going to still have problems with the housing numbers, because people losing their job means they're not going to be able to afford their mortgage payments, and it's a vicious cycle on right now.
Okay, because really the U.S. is bleeding jobs at the present time.
Yes.
Okay, so right now we're looking on your screen. It says, private employers cut 298,000 jobs in August. I mean, if you look at that figure, and you're right, that is a huge number, but productivity was on the rise in the second quarter.
Well, what does that mean? Productivity means that people are working harder and they're becoming more efficient, which is great, because that's one thing that we're good at.
They want to keep their job.
Exactly. That's exactly the point. It's nothing wrong with increased productivity here in this country. That's always that, along with population growth, actually builds growth overall. But we got to, like I said, take a look at the entire picture instead of isolated numbers.
Sure. Okay. This has been the hot topic today. Got to have you weigh in on this. The fact that maybe come October, November, women are going to be dominating the workforce. They're going to have more jobs than men. thoughts?
You know, I think that every family has, you know, the husband and wife in a family, they're going to decide how they go about running their household. My wife is a stay-at-home mom. It doesn't mean she does not work. You know,
she works very hard.
Works extraordinarily hard, taking the kids here, there, and everywhere. Quite honestly, I don't know how families do it with both parents working, especially when they have 3 kids. It's up to the individual family. I could care less, you know, what color you are, what sex you are. If you can do the job, you're getting the job. It's as simple as that.
Okay,
Hanging
Chris,
out with the Watchdog on Wall Street, Chris Markowski all morning. We got a lot to get through. Okay, I got a few things we want to talk about. The latest on Bernie Madoff and the SEC. We're also going to talk about the stock market decline, and we're going to talk about TARP profits. We're going to do it all in 3 minutes. I don't know how.
I don't know.
Okay, so Bernie Madoff, SEC says, oopsie. Turns out we didn't have our finger on this switch.
You ever watch those vampire shows like True Blood and how the vampires glamour people? That's basically what Bernie Madoff did to these SEC workers. He was in there like, yeah, I've got all this money, look at my office space. And you got to understand, the SEC, they've got these workers, these enforcement agents that are right out of college. They need to start actually hiring some of these financial crooks to teach them how the fraud is perpetrated. The entire agency is just tasked with way too much.
It's like the Frank Avondale method. You know, you go with the guy that used to do it and then get him
Yeah, same thing. The original chairman of the Securities and Exchange Commission was Kennedy. And Joe Kennedy, because he was involved in a lot of financial fraud, they brought him in and said, oh, well, you can find out where the bad guys are.
Okay, real quick, TARP funds now reaping some profits. The banks are paying it back with interest. This is something that you told us would happen.
Yes, nice to see that some of this money is coming back, and I hope it continues to do so. But my big concern, once again, is it really coming back? Or is some politician going to grab it and spend it on some shovel-ready project somewhere, which could cause some problems as well?
Okay, and finally, the stock market was on this little joyride for about 6 months, came to a bit of a halt here. What does that mean for people as far as their 401ks? What does it mean for the larger stock market picture?
Yeah, I kind of equate our economy right now, it's like one of those cans that is following a car after like a just married thing. Until we start getting any type of real jobs growth here in this country, the economy is going to bounce along. There's only so far it can go in regards to cost cutting, you know, layoffs, whatever it may be. They're going to see some replacement costs, but until we start seeing jobs growth, the economy is kind of a wait-and-see mode.
We got an email from Jeannie, and she writes in from Homestead, PA, saying that she loves to see you on the show. She wants to know more about the compounding interest and that principle. We don't have time to explain it, but tell them where they can find it.
WatchdogOnWallStreet.com, my website. I've got this thing called a magical compounding calculator, because I couldn't tell you the formula, quite honestly. It's quite confusing, but it works, and it's the royal road to riches.